Trump's UK trade pact raises more questions than confidence. Markets jumped, headlines flared. The president called it a full and comprehensive deal. But behind the bluster of a social media announcement and a brief market rally, the reality of this new US-UK trade agreement might be a lot less than what it claims. Are we witnessing a turning point in global trade, or just political theatre dressed as diplomacy? This video breaks down the facts behind the much-hyped trade deal between the United States and the United Kingdom. We'll explore what the announcement actually means for the economy, for American consumers, and for the broader tariff war brewing on multiple fronts. You'll hear the numbers, the context, and the political and financial stakes without the spin. Because while the president promises a new era in transatlantic trade, the details suggest something much smaller. On social media, President Trump called the agreement with the UK full and comprehensive. But so far, no written details have been released. And based on what economists know about our trade relationship with the UK, the real scope of this deal is limited, almost laughably so. The United Kingdom is America's 11th largest trading partner, accounting for about 3% of total US trade. That's significant, but far from game-changing. More importantly, the average UK tariff rate on imports from all partners is around 1%. Even if this deal brings that down to zero for American goods, the difference is minimal. Some economists estimate the reduction might only be from 1% to 0.8%, a barely noticeable shift, economically speaking. In short, this is not the pot of gold Trump is selling, it's barely a handful of coins. On the day of the announcement, markets were briefly buoyed. The S&P 500 climbed about 0.5%, and the Dow Jones Industrial Average jumped over 230 points in the first 30 minutes of trading. But this surge had little to do with economic fundamentals and everything to do with hope. Hope that this small deal signals a broader de-escalation in Trump's global tariff war. Investors are desperate for signs that the White House is backing away from the edge of an all-out trade conflict. But as we'll see next, this deal doesn't come close to addressing the real economic damage already done. Let's not forget the United States currently has massive tariffs in place against China, up to 145% on some imports. These tariffs have already started to backfire. Toyota, the world's largest automaker, has warned it will lose $1 billion in profit this year alone due to tariffs. Ford has announced price hikes across several models, and average Americans, they're starting to feel it too. If you're in the market for a car, like one analyst who put off buying a second vehicle, you're likely facing 25% higher prices on imported parts or vehicles. And the uncertainty is freezing demand. Even more alarmingly, Federal Reserve Chair Jerome Powell recently warned that we are now at heightened risk of stagflation, a toxic mix of slow growth and rising prices. The Fed has refused to lower interest rates in response to Trump's pressure, choosing instead to wait and see if tariff uncertainty resolves. One small deal with a country like the UK, especially one we already have a trade surplus with, doesn't begin to touch the scale of this problem. It's important to understand why the UK deal happened first. It was the easiest one to make. The United States already sells more to Britain than it buys. That makes negotiations smoother. And there's a long-standing special relationship between the two nations, politically and culturally. In other words, this was the low-hanging fruit, a symbolic win, not a structural shift. And even here, there are questions about whether Congress must approve it. According to the Constitution, foreign trade falls under congressional authority, not the president's. While past administrations have sometimes used executive powers to negotiate bilateral deals, any truly binding agreement would likely need legislative approval. Think back to Obama's Trans-Pacific Partnership. His own party fought him over even the authority to negotiate it. So while Trump may claim this deal is done, its legality and enforceability remain murky. Some analysts argue that even a small deal could give United States trade officials more leverage heading into critical talks with China in Geneva this weekend. But that hope rests on fragile ground. If Trump's deal with the UK still keeps the 10% base tariff in place, then even a friendly nation with a United States trade surplus isn't exempt from punishment. That sets a dangerous precedent. It says effectively no matter how fair your trade, we'll still tax you. And if that's the message, China has little incentive to trust or reciprocate. especially when the stakes for them are far higher, involving hundreds of billions in trade, complex supply chains, and global manufacturing dominance. Despite the headlines, what we have is not a full and comprehensive trade deal. What we have is a political move dressed up as an economic masterstroke. A tweak in tariffs with a minor trade partner during a moment of escalating economic risk is not the kind of breakthrough the markets or the American people need right now. Instead, this announcement looks more like an attempt to distract from mounting pressure from Congress, from the Fed, from businesses, and from a public increasingly weary of economic whiplash. If Trump wants to be remembered as a deal maker, the next deals will need to be real, ratified, and meaningful, not just tweeted. Thanks for watching.